Good morning and welcome to the DASNY New York City headquarters. I'm glad to see everybody here today. And today we have our first meeting of the Office of Cannabis Management Public Policy Committee. Really designed by statute to make sure that in addition to the various boards who are approving documents, that this small group of public policy committee members make sure that we're not violating any concerns that OCM or CCB might have relates to the financing and funding. So we have a fairly simple and straightforward agenda. I will, after we do open remarks and have the members present, I'll give you a little bit of an overview of the purpose from the fund perspective. We have Mr. Thompson here who's representing the fund, so he'll be here to answer any questions that we have. And then we can talk and answer any questions we have in public. Then negotiation of the LPA itself, we'll discuss that contract in executive session. That's the contract is still being negotiated as we speak. Any other opening remarks? All right, so again, with me, we've got Tremaine Wright, who's the chair of the Cannabis Control Board, Chris Alexander, who's the CEO of the Office of Cannabis Management, and myself, President and CEO of DASNY, as well as a member of the Office of Cannabis Management, Cannabis Control Board. We also have with us Linda Baldwin, General Counsel, OCM, and Stanley De La Cruz, Chief Executive Operations. Mentioned Bill. We also have Ricardo Salomon and Nadine Fontaine. Nadine is our General Counsel, and Ricardo is our Deputy General Counsel, who primarily worked on the LPA. So that's the move. Right. So, the reason we're here today is that, as you all know, we've been spending quite a bit of time over the past couple of months, almost the past year now, working on the funding of the Social Equity Private Investment Fund. And on April 22nd, we had the authority to create this fund of 2022. And we created the Public Policy Committee, again, as an oversight component of that legislation. So this is the first meeting of the Public Policy Committee. It will not be the last. We look at various aspects of the funding. The Public Policy Committee will come together with the sole objective of making sure that anything that happens from a policy perspective is in line with the statute and statutory authorization. What brings us here today specifically is over the past 8 months or so, we've been working very hard on this fund. We hired through public procurement, Bill Thompson's firm, to work on and manage the fund. We've all been through that process, and they have been in the process of looking to raise capital in the capital markets. A couple things have happened I think are important contextually. One is the capital markets generally have changed over the past 12 months significantly. Interest rates have gone from 2% on the short end to 5.5% on the short end, and from 0.5 on the long end of that to 3.5 for now. The Treasury has met, or the Fed has met several times to increase rate hikes. We've had 8 rate hikes, Bill, since we started the process. So the capital markets generally have been more difficult than they were in the past. Second, the cannabis capital markets have changed in the past 8 to 10 months. Anybody's been paying attention knows that throughout the country, equity capital in these markets has been difficult. And third, and I think most importantly, as we, as a Office of Cannabis Management, wanted to make sure that we stay true to all the TPI interests, that's the true party of interest, to make sure that there were no conflicts with investors. We ran into quite a few investors who were interested on the equity investment, but they did not want to, or need to, or could not, for different folks, meet our TPI requirements. So they didn't want to invest in cannabis otherwise, didn't want to be committed to not investing for 10 years in the cannabis space here, or quite frankly, already had investments either on the table or proposed that would have been in conflict. And so we have pivoted to a credit structure to raise the capital as opposed to a debt structure. We identified credit providers who are interested in a component. So from our perspective, as raised to the fund is a different source of capital, but the use of capital will still be the same. So the source of capital will be a debt credit facility as opposed to an equity facility, which is what brings us to this meeting today, to adjust our limited partnership agreement to accept an equity, a debt credit markets as opposed to an equity solution. So that's the modification today. This change will allow us to move and finalize our negotiations with the credit providers. But those documents and all will again have other approvals and oversights, and obviously also cannabis management and the Cannabis Control Board have specific things that they're concerned about inside of a credit structure, and we'll make sure we are fully embraced and make sure those concerns are addressed before we finalize any agreements to actually fund this. So this is a step along the journey, not the final step, but definitely a big step. And any questions about that? Concerns?
I've got an initial question, let's save that discussion, but does this pivot still allow for additional investors or just the credit?
Yeah, so two things. One is this would allow specifically for additional credit investors without any additional work. We recognize all along the LPA was a living document, and we continue to look for equity investors. If we get an equity investor, we'll have to amend the LPA yet again to accommodate those investors. So it doesn't eliminate that as a possibility. So in the future, we may get more equity investors who are interested or someone who doesn't have conflicts. But this would allow us to have additional debt investors, but it would change the equity side. So we'd have to come up with another LPA if necessary. Now, we always imagine that the LPA would be living documents. Each investor will have different things they want or don't want. So it's not surprising we might have to amend the LPA, but obviously we do that. It's the same approval metric, if you will. Questions? Any thoughts or?
No, I appreciate the clarity on the pivot. I think one, we gotta obviously focus again these resources out to support these licensees. So however that comes, I think one thought in my mind just continue. Are we going to change the structure again? Do we anticipate additional changes to the approach as we're experiencing now? And that's why I was asking that question.
And I think there's two things. One is from an investor perspective, we have a clear path on how we're trying to get to the end of the day here. Focus very hard. On the other side, that is the implementation and rollout of the funding. And so we've had some concerns about costs of these facilities. I think two things there I just want to highlight. One is comparing the cost that we are proposing to CAURD licensees and the cost that might get from the general contractors, comparing apples and oranges. So we're providing not only the structural build out, we're also providing ATMs, point of sale systems, computer systems, furniture, equipment, things that would not necessarily be in a construction cost. So we want to make sure that all that's clarified. The second is when we estimate the cost to our licensees, we want to give them the highest cost it could be. It's always easier to start with high and come down as opposed to the other way. But we are actively working on getting those costs down. So we're doing things like saying, let's go in the building, see if there's things we can utilize, making sure from a cost of cabinetry and other things, we're getting good bids. And then we're asking our DB firms to bid out the construction side to at least 2, if not 3 different contractors. So there is some competition in the actual build out piece as well. We've had, I don't want to talk about specific sites, we've had 3 sites now, got to go through this work order process. They've all come down in cost. One came down 100,000, one came down almost 400,000. And went through this process.
In the initial estimates that have been provided to licensees, they're getting that high quote number. What are the updates? What kind of how have you been able to provide those updates to the licensees as those costs come down, as they choose different fittings that are maybe more affordable than others? Like, are you engaging with them at that level so the adjustments are happening in real time and they're aware?
We are literally having real-time conversations with the licensees as we start moving on the path. So as licensees get matched to a location, we're asking them a couple of things. One is for design perspective, just kind of the general things, color, logos, and kind of things you expect, right? So we have some folks who really want more of what I call a neon kind of design. Others want more of a utilitarian design. We're working on that. Second, on the structure itself, we're saying things like, to put in a new floor for $50,000, or if you want to select a concrete floor, we can do that. So they do have the opportunity to do that. Remember, from a fund perspective, however, we're building 10-year stores. So some of the things are probably more cabinetry perspective, trying to get cabinetry that will last for 10 years. But we are working with licensees in real time on their costs.
outside of the renovation, some of the lease costs, I know lease terms, one has been a long, lengthy process to secure all these locations. I know the team's been working hard to do that, but some of these costs, now that we have this kind of dual approach where individuals are able to secure their own locations, they're seeing some differences in lease costs. Can you speak to any of that, like in terms of the things that are required in a lease that will escalate or raise the price that would distinguish it from an individual going at their own and the cost they may get?
I think it's two things. One is we are going after, prime real estate, for lack of a better term, right? And particularly in New York City, you go around the block and something could be drastically different from a cost perspective and where you're facing those things. So we're working really hard to get the best locations possible and make sure we don't pay a cannabis premium. We've had some real examples of our licensees negotiating worse deals than we did on the exact same piece of property. So we believe we're getting great prices. We also do pro formas to make sure that each specific location can work with its lease cost. That's really generated by your traffic revenue, square footage, point of sale systems, type of things that make an impact on cost. So when you hear things, you always hear them from the high end, right? You get the flags. Well, we have leases around the state at $60,000, $80,000 a year, right? It's not, they're not all kind of as high end market. But we do want to have some CAURD licensees in great locations. We want some CAURD licensees to be in places that are high traffic and set a stage for what New York cannabis ought to be. And we want to give them the position to be in a Union Square or Fifth Avenue and other places where they can really compete with the best of the best. Because at the end of the day, the market will continue to open up. We'll have to compete with other licensees, and we want to make sure they're in the best position to do that geographically with their build out as well as onboarding, which I know CM's working on. We're well prepared for
that. Going back to the structure change, is the credit structure, is it more efficient as well? I mean, are there any other kind of benefits to this pivot from the equity approach to this debt credit approach?
Well, two things. One is it limits the number of investors we are working with. So that makes it more efficient just generally, right? Just from putting perspective, the more investors you have, more people you have in anything, right? Second is when we lock in our rate with the credit investors, we'll be favorable, we'll talk about that in a second. That's it, right? So as the market changes, there will be no changes in the cost of capital. So whoever's getting a loan today, 18 months from now, there will not be, oh, geez, the credit markets are going crazy, or the debt market, the equity markets are going crazy. Now we need to charge a higher rate to those.
It'll be a flat rate.
And I guess that leads into the question I'm kind of thinking about. Once this is done, will the licensees that are engaging with DASNY for their build out be able to get full terms to whatever their agreements are going to be?
Yes, we have an outline of full terms now.
Okay, so
And a term sheet. Once we finalize negotiation with the investor, we'll solidify them. But I can tell you generally, we're looking at 10-year financing from the time that they walk in to the time they finish on a level payment schedule. And our cost of capital will be the 12 to 13% range. So that's the general piece. Obviously, we security issues will be in there. I think the one thing that people don't publicize enough is we want our social entrepreneurs not to be tied up with this capital. It keeps them from getting other capital for expansion or inventory, those things. So there's no individual guarantees required on this financing. So when the licensee goes to get their next bit of equity investment or other credit facilities or inventory financing, this will not be an impediment to their own capital structure. And I think that's a real advantage that you get, typically not see in a commercial markets. There's no personal guarantees, no collateral the individual licensees are putting up outside of the physical space.
Just wanted to make a point of clarification. So the lending and the loans are all being provided by the fund. Just wanted, and DASNY is providing the services as agent for the fund, and the entity is our subsidiary. So just want to make sure for the record, it's not DASNY that's doing the work. It's the Social Equity Servicing Corporation who acts as agent on behalf of the fund. The fund would be the entity that would be issuing the loan to the licensees. Just one point of clarification. We're on the record.
Clarification has been made.
This will be forever recorded.
You have a question before we dig into the LPA itself?
No, I think definitely understand the pivot. And thanks for addressing some of those cost issues that I know have been concerning folks. I think as well as the terms, not having full clarity has definitely concerned some of the licensees. So good to hear that one, that we're getting that clarity soon, but also that there's a reason behind that lack of clarity as we finalize this process.
Yes. And I think that over the next week or two, we'll be able to step to more and more clarity as we get closer, right? So we'll be able to give these parameters for folks so that they don't feel like they're out. And I'll tell you, they had a big equity conference for cannabis, or financial conference for cannabis down in Miami 3 weeks ago. Terms were getting much better than people can get in the marketplace. Looking to do that in your debt. And quite frankly, it's very difficult now for anybody, cultivator, processor, anybody to get equity capital in cannabis space. This has become a difficult moment in time. I would expect that will level out at some point in the future. We can't predict when that might be. But right now, it's a difficult time. Equity investors and comparing our cost of capital 25, 30, 35% in the marketplace.
Chairman, I think that was one of the assumptions that people did not bake into this process. They did not think that our state financing agency would be faced with the same challenges that every other cannabis entrepreneur has. So thank you for sharing that. I think that's a bit of clarity that people need to recognize and to acknowledge when they think about the success that this program is having and how influential it's going to be.
Yeah, I agree with that, Tremaine. I also think it's important to note that as we are going through this process, we're also signing leases and getting work orders out and getting things moving forward. I'll hope that maybe by the end of this week, we have press on how many leases have been signed, what work orders are, getting more clarity on the terms. So, and as we go next week, we'd like to do that as things become more solidified. Thanks. With that, I think we should go into executive session. So I would move we do that.
Let me just read something on the record first.
Thank you.
It's the disclaimer.
So pursuant to Open Meeting Law, Section 105, we'll now move into executive session to consider discussions of proposed or pending or current litigation. I didn't finish. Pursuant to Open Meetings Law, Section 105, we'll now move into executive session to consider discussions regarding proposed, pending, or current litigation and/or the proposed acquisition, sale, or lease of real property, or the proposed acquisition of securities, or the sale or exchange of securities held by such public body, but only when publicity would substantially affect the value thereof.
Thank you. All right, Deb. Stop.
Is she here?
Here. All set to go.
Thanks, Deb. We've come out of executive session. Can you just say we haven't done anything in executive session?
We have not, the committee has not made any determinations or decisions while in executive session.
Thank you, Nadine. So with that, I would like to read a resolution and need action on behalf of the Public Policy Committee. For the record. Approval of a revised fund structure reflected in the proposed amended and restated limited partnership agreement with Social Equity Impact Ventures GP1 LLC and authorization to proceed with negotiations and funding through third-party financier. Under the authority granted to it pursuant to PAL 1678-32, DASNY selected to invest in New York State in New York Social Equity Cannabis Investment Fund LP, the fund, a private credit fund established to cover costs associated with establishing conditional adult use cannabis retail dispensaries for operation by social equity licensees duly licensed pursuant to Article 2 of the cannabis law, the equity licensees. And in accordance with the above authorization, the fund was established pursuant to a limited partnership agreement dated as of October 11th, 2022, partnership agreement, and pursuant to PAL 1678-32 and stated in the partnership agreement, the Public Policy Committee, the committee, was to be established for the purposes of improving certain aspects of the fund, including, among other things, the proposed structural change of the fund reflected in the proposed amended and restated limited partnership agreement, the amended partnership, and any indebtedness to be incurred by the fund, which is currently being negotiated and proposed by the fund and a third-party financier, proposed investor. And this committee has been convened to review and discuss the proposed revised structure reflected in the amended partnership agreement and proposed transaction with proposed investors. After discussion, the committee is being asked to approve, effective immediately, one, the revised structure reflecting the amended partnership agreement and any necessary non-material changes to the amended partnership and limited partnership agreement subsequent to such approval is also approved. Two, authorizes the fund to proceed with negotiations with the proposed investor and update the committee once the terms of such investment has been finalized. I will just let you know that the DASNY board has approved the amended and restated limited partnership agreement, and the division budget has also sent a resolution approving the amended partnership agreement, subject to the minor non-material changes as we discussed. Any additional discussion about this item?
None.
I know I've been acting as the chair of this, but I'm not. But anybody who has, I would make a motion that we approve it.
I move that we approve. So,
All in favor? Any opposed? Great. Motion carries. Thank you all very much for this. It was a great moment in this, this fun. Want to talk a little bit about next meetings, kind of the public partnership committee generally. Once we have negotiated these terms and have terms, we'll need another meeting of the BBC to review them. Do that ad hoc as soon as practical. And then second, I think that meeting quarterly to update unless we're needed otherwise makes sense. But if you guys have another,
I agree. That sounds good to me.
so we'll put together a quarterly schedule and just send it out to everybody so we have it. Can put the dates on our calendar. And again, we'll have some special meetings as needed.
Sounds good.
Anything else we need to discuss?
Thank you.
Move adjournment. Thanks, everybody. Appreciate it. Thank you, Deb.